All right, guys, it was an absolutely huge day for semiconductors, and the big news was Avago could probably be on a cusp of buying Broadcom. It's a deal that I think right now would rank the third largest of all time in technology. Now, of course, my subscribers along the stock, I know a lot of you guys watching the show are. A lot of you tweeted me. I'm really happy. As a result, also, you can see that Skyworks had a huge day as well. A couple of names we've been pounding the table on in this show. If you're in them, really fantastic. In fact, Broadcom, if the deal is good enough, could actually double. Now, it's obvious that consolidation revolves around the growing importance of all of these things. I mean, listen, we know smartphones are the central element driving these deals, but think about this. We've got storage, storing all this data we create every single day, powering these devices, the Internet of Things, smart grid, smart cards, cybersecurity. It's all going to be one giant connected world, endless streams of information. It's got to be organized. It's got to be protected. I know some of you feel like you've heard this story before, but all of this stuff, is now we do use it. I'm a technology neophyte, and I use this stuff. Not like 2000 when I heard these hot acronyms and it sounded cool on a napkin. This stuff is real, and in my mind, that means there's going to be more deals, more blockbuster deals. The question for the panel: am I too optimistic? Oliver, you've been the voice of reason so far for the first 31 minutes and 55 seconds of the show.
Well, so I guess I'll still be reasonable.
Well, Lori, too.
I think you bring up a very good point. These are unlike the tech bubble that we saw in 99 and 2000. These are real companies that are serving a real need, have real revenues and real profits in many cases. And I think that the growth in that area is going to be absolutely fantastic over the next decade.
Do we have to worry about them being cyclical, though?
Well, yes, to a certain extent.
What aspect?
But again, technology is a very broad field.
The thing is, Lori, we had a tech CEO on last night whose company just went public, and he made a great point that back then we weren't built out for this. Now, I can remember we spent $1 gazillion on our website, fiber optic cable. I used to do a show on Yahoo Finance. People in America couldn't watch it because it was too herky-jerky in their computers. We have the building blocks now, so it feels like, everything gets cyclical at some point, but I feel like trying to pick the top of Apple. I don't know how. I think this thing
But it's a growth sector.
So in other words, you're saying, so PCs are going obsolete or close to it. So we can phase that out. But there's enough
with mobile, but they'll play a lesser role.
In other words, these other aspects that you're talking about, especially the cyber threat, which we had a deep discussion about earlier in the show, they'll sort of offset the lessening demand in those areas.
Right, but also
they're going to create new areas.
Okay, right now we have a very low rate environment. All these deals are going to get done, and they're going to get done in the next 6 months before we see rates go up. And I know they're going to go up, 25 basis points, but that's a really big impetus. And then you combine it with what our discussion has been, which is this integration. Like there's a company, Magic Software, MGIC, in Israel. What do? Very similar to what we were talking about last night. Enterprise software that brings entire networks onto a mobile device, that everything from accounting to human resources.
And there's no doubt, Matt, that, listen, that probably is creating a sense of urgency, that cheap, free money will go away. So that will hurt buybacks. That might hurt some of these deals. But that means in the meantime, though, we could see some huge blockbuster deals without a lot of worry about necessarily price tags.
No, I agree. I think you're seeing some of the premiums that have been paid as of late, and they're high. You're paying up for these companies, and it's not just the tech sector. We're seeing it in pharmaceuticals, we're seeing biotechs, we're seeing it all over the place, and it's not going to end. I think we're going to see this probably a huge rush before the market hits a high in the next 12 months of people buying, consolidating, trying to get the bottom line to look better without actually growing revenue as well.
Go ahead, Noah.
Well, I was just wondering, do you guys think that you're going to see a lot with the tech surge, with a lot of younger investors getting involved, because who better understands it than a lot of people?
You make a great point. One of the things we are seeing, a lot of young people are starting their own tech companies. They're not necessarily buying these stocks, but these young tech entrepreneurs, these kids who grew up with this, they want a piece of the action. They're writing apps. They're trying to start these companies. So they are involved, not necessarily as investors, but as innovators and inventors. I think that's great. This country was built on garage tinkerers. Hewlett-Packard started in a garage. So there's some kids somewhere. Listen, the new whole thing with the cyber reality thing, that was a failure like 10 years ago. It was too early.
Virtual reality.
Virtual reality. Some kid went in the garage. He didn't have, he doesn't even have a degree in this stuff. Started playing with it. Next thing you know, you got the woman of your dreams, Oliver. What you put in these?
Well, I'm married, so I have her. In case she's watching, bye, Virginia.
Good answer. Smart man.
All right, so I think this is going to go on. And one other thing, and I want to ask you your opinion on this. Matt talked about this happening in other areas. Almost every deal I've seen in the last 2 years, not only was the acquiring company up big, the company that took them over was also up. What does that mean? Because to me, that's a bullish sign.
Well, I think that what it means is that CEOs and the acquirers have gotten much, much smarter and have done much better diligence in terms of who they're buying. So they're no longer just buying for the purpose of growing in size, saying, how do we make this synergistic and actually grow and improve us? What's the missing component to our existing business plan?
This replaces R&D. This replaces
to some extent
CapEx
it does,
spending.
right?
This is a new de facto way of, buying
intelligence. Accretive right away.
Right, it's accretive right away.
Yeah.
It goes to the bottom line right away. So it might be a new part of the business model, you're saying.
I think so, absolutely.
All right. What do you think, Hillary? How much further? A lot more deals. You're looking for much more deals.
There's going to be many more deals, and then we're, of course, going to have a lot more cross-border deals. I mean, I was just even thinking in the semiconductor space, you're going to see analog devices. I've been doing a lot of work on analog devices out in Europe. That semiconductor company, we're going to see things very similar to what we're talking about, Intel, Altera,
we are seeing a
Ruma.
lot of U.S., Asia deals, whether it's Japan, Korea, or even now China. All right, thanks a lot, guys. By the way, you got to catch